Welcome to today's Finextra Research webinar from Obligation to Opportunity, Making Payments Modernization Work. I'm Scott Hamilton, contributing editor for Finextra, and I'm here to lead a conversation and explore important insights on that topic with you, our audience. We'll be jumping quickly into what should be a fantastic discussion with our expert roundtable. But first, some quick notes. There's a great downloadable asset for your use in your invite. You're encouraged to ask questions, and we'll do all we can to answer as many as we can during the session. And you'll have a chance to weigh in on 2 audience polls today, too. So many financial institutions are finding that keeping a handle on payments is an almost unwinnable battle amidst a growing list of choices between channels and capabilities, compliance and market changes, core systems, and competitiveness for the future. Tough decisions must be made on often expensive, if smart and sensible processing and people upgrades, just to keep pace with the industry's evolution. And the penalty for not applying real money and modern methods to tackle these burgeoning payment capability demands and escalating customer expectations is to surely fall further behind a rapidly changing financial marketplace. That is what we're seeing as the new reality of global banking. And it's a worldwide phenomenon. It's many regions and countries innovating new local and cross-border solutions on how to pay and get paid. It's established banks admitting we must be faster and more flexible to match our customers' needs now and tomorrow. It's neobanks initiating nimbler, faster solutions and service from the cloud, day one. It's upstart fintechs and crypto firms revolutionizing the way payments are made for their consumer and corporate customers from the outside in or the inside out and online only. So we're waving goodbye to the days when everybody everywhere viewed standard payment rails and methods as the ways to transact domestic and cross-border payments, according to long-established rules. Still, for many in traditional bank land, systems and service projects still need to be prioritized. Budgets must be approved. Increasingly, old software doesn't pass modern production demands of clients who expect their providers to be multi-channel, multi-currency, and 24/7 in their payment processing and service provision competence. Yet compliance has also gotten more complex. Financial criminals are getting ever more creative in schemes, scams, and sophistication. And in fact, they're capitalizing on some of the same AI tools and innovations used by financial institutions to bring more intelligence and efficiency and security to their own operations, performance, and client experience. So amid all of this, what's a financial provider to do to avoid overspent budgets, underestimated timelines, underallocated, yet critical priorities in any financial services company's technology and talent planning, while finding the right pieces to fit specific payments needs now and build a more flexible, responsive, and resilient future? So just a few of the questions we'll pose our fabulous panelists today. Kellie Johnson, Senior Vice President, Payments Americas for RedCompass Labs. Ramon Villarreal, Global Payments Industry Lead, Global Financial Services for Red Hat. Carl Slabicki, Executive Platform Owner, Global Payments and Trade for BNY, and Louisa Dahl, Head of Payment and Treasury Systems, Virgin Money. Kellie, with your deep background in payments and financial services, talk about payments modernization, what it means across the payments landscape, how we reach this place with so many competing priorities for those budgets, why these providers must embrace the imperative to make payment transactions better, smarter, faster, and what's going to make all of this a particular challenge given what you've called the perfect storm of many influences and impacts on this issue here in 2026. Kellie?
Thanks, Scott. Sounds like a fun place to work, right? So for anyone not familiar with RedCompass Labs, we lead and support payments modernization programs across the ecosystem, and we focus on AI as an enabler. To me, payments modernization is about upgrading how money moves. So payments are faster, more resilient, more transparent, easier to extend. They need to meet customer expectations while still complying with regulatory risk and cost requirements. Easy, right? So payments used to be simpler. And to be honest, they didn't change for many years. If we think about the Swift MT message structure, Scott, as part of your opening there about traditional and some legacy stuff in there, the MT message structure didn't change for more than 40 years. So if you think about 40 years, we didn't even have personal computers, internet, mobile phones, or anything. That's how long it's taken us, the industry, to finally pivot to a new, more modern messaging standard. Things don't happen fast traditionally. But now we operate in a world that never stops changing. We're faced with layer after layer of new rails, new operating models, evolving standards, increased regulatory change, and technology like AI, which we're going to get back to. Oh, and by the way, we actually never get rid of anything in payments. We just add to it. So I often think about the example of a bank operating in the US. In 2025 alone, we had a client that was faced with maintenance and standards changes to Fedwire, CHIP, CBPR Plus, NACHA, and TCH RTP upgrade to version 5. This is before they can even plan or budget for new products, features, capabilities, or technology upgrades. It's, a lot of banks have built their payment systems at different points in time by payment type, in silos, often by geography and in response to market needs, and by experts that often became the sole source of knowledge about how all of these systems and rails worked. Payments are complex, and the environments that most FIs operate in have become even more complicated. This is why they struggle to keep up. But talking about competing priorities, I think we're at an inflection point right now in payments. We're shifting from payments being a cost center. So traditionally, when I was a product manager, it was always struggling to find budget to get things done because we were essentially a cost center, to now being recognized as a significant opportunity for growth and differentiation. So what's important is, I think, the approach to modernization from an FI perspective. It isn't a single project or technology upgrade, but an ongoing transformation to make sure that we're ensuring that our payments capabilities can evolve just as all of these things continue to change. With regards to the biggest challenges, I think first, we talked about it already, the sheer pace of change. Last year, RedCompass Labs published a piece of research showing that 2/3 of banks say that they're struggling just to keep up, and not because they lack intent, but because of the volume of change is relentless. Second is the pressure of colliding legacy infrastructure and project risk. So most payment environments weren't designed for 24/7 always on exchange and settlement. In the same research we found, so 80% of payment modernization programs run late or over budget. So even small changes can create resiliency concerns. And so that makes banks or financial institutions understandably cautious about how they proceed, and sometimes, slows down innovation. So, and then third is the capability gap. And I think this has been something that we've talked about as an industry for a long time. Payments expertise is scarce. I can't tell you how many times we've worked with clients across multiple projects, and it's the same product owner or subject matter expert across 3, 4, sometimes 5 different projects, often with high stakes, or business outcomes like upgrading an instant payment scheme. So some of these problems aren't new, but I think everything's converging or starting to converge, but it's not all doom and gloom. The good news is we're seeing a clear shift in how financial institutions are responding. So whether it's simplifying architectures, rethinking vendor models, starting to find smarter ways to scale expertise, and now using automation and applied AI as enablers or accelerators. So while 2026, I think, is going to continue to be challenging for everybody, it's also a pivot point. So I'm looking forward to digging in a little bit further during today's discussion.
Which we certainly will, and thanks for that, Kellie. Perhaps we should be looking for plate spinners and jugglers. I don't know. Maybe that would be a good strategy for new employees to be able to deal with all these. Ramon, Villarreal, you also work with clients on a global basis. You talk the language of payments every day. Why does this task of choosing what to do next regarding that payments modernization seem so complex more than ever? And talk about some of the factors involved, those challenges that Kellie's talked about, when it comes to embracing, supporting digital currencies and all these other capabilities that we're talking about, the new world. We'll talk about it more later, but right now, your top level issue of the questions we're dealing with today as financial institutions. Ramon?
Yeah, thank you, Scott, and thank you, everybody. It's it's interesting. I've been in the payments industry for more than 20 years. I'm kind of showing my age here. And more than 25 years. Wow. Anyways, and it used to be really, really different. 10, 15 years ago, it used to be the world of if it worked, don't fix it. Now we are in the world of constant change, constant evolution, constant innovation, doing things, the new thing coming in every 3 months. And I think it's going to accelerate. AI, cryptocurrencies, new ways of processing, customer expectations increasing and demanding new products and new capabilities is something that, yeah, I mean, as Kellie mentioned, all of these are pressures for change. And at the same time, we have the regulator saying, well, you have to have a system that is stable, the business continuity is a primer, you cannot fail, your system has to be reliable and scalable, and you need to do a lot of things. And those challenges, those are the challenges that we tend to forget into recently. We focus more in what is the next big thing, and forget what is the challenges on resiliency. And I think, and me being in the technology side, and just for more background, I come from basically one of the payments central infrastructure providers in the UK. So our focus always was in the resiliency. You know, the system has to never fail there, and then into that we add all the automation and the acceleration that we need to bring products faster. And you see that in the market. I mean, all of those challenges, all of those pressures at the end of the day are pressures in cost. You know, I have a huge operating cost that is putting a hindrance in my modernization. I have to maintain a huge team of operators or people in the processing side that is going to because that I cannot move because I need to maintain this system and I cannot modernize over here. What I'm seeing and one of the things that I've been working with a lot of customers is, if I focus in the fundamentals, if we focus in building that foundational environment in a way that is resilient, sustainable, scalable, but also automated and designed to minimize the operations, and I fix my foundation, I am able to liberate my time to market. I am able to bring in all of those modernization a step faster. And we had a really, really great experience with a customer in Ireland recently, and some other customers in Asia, in which basically we did that. And we were able to see how, by focusing in the fundamentals, by building a reliable, scalable, and automated environment, these are organizations that were not only able to deliver in time, and I'm talking about, for example, the release of SEPA. These were organizations that were not ready for SEPA 6 months before. And in 6 months, they were able to come out even before the timelines of SEPA Insta. So, and then we were talking about the next evolution. We're talking, okay, so how are we going to do crypto? How are we going to do AI? How are we going to do this? And all of those new capabilities, you bring them into the system faster and in a more efficient way. So yeah, I mean, I guess in terms of payments modernization, I guess it's always been my doctrine, but I'm an infrastructure guy. Just focus on the fundamentals, build them right, and then you will be able to reduce those time to markets. You will be able to reduce the complexities in the operation of the system, and actually liberate all of those people that you have stocked in an operational system to actually go and build a bright new and shiny thing.
Got it. Got it. I'll tell you what, when you said first don't fail, you had me sold. First don't fail. And then from there, optimize your systems from there. Carl, first reactions to your co-panelist remarks. Your bank's a prominent participant in worldwide correspondence from the US. What's different now for the industry and all these payment options and channels, rails, and decisions required by payments teams? It's not just about technology, it's about people too. Legacy systems, though, seem to be holding people back, and you feel strongly about it. Talk about interoperability. Carl.
Yeah, sure, Scott. No, but appreciate that. And I'll pick up on a couple of things, maybe try to take it from a different angle and perspective here. So as you mentioned, BNY is a unique vantage point, I think, in the industry as a bank, where primarily across the globe, where we serve about 2,500 banks in many different markets, helping them do cross-border money movement for B2B, small business, retail payments, helping them serve their clients, right? And then really helping more diversified portfolio in the US of financial service providers and institutional clients. So we look at this from a infrastructure investment scale platform lens on how do we really help others, right? And a lot of these kind of modernization discussions is, from our perspective, how do we really kind of lead these trends in the industry, kind of be at the front and center of that, solve for some of these challenges and kind of help a lot of our clients, whether it be a U.S. corporate, a bank somewhere in Southeast Asia, anything in between, really adopt these moving pieces. Because as you mentioned, there's a lot of things going on. We have traditional payments infrastructure that's looking to expand its operating hours, right? So Fedwire came out as just one example by 2028, looking to expand to more continuous operating hours, right? So we have traditional infrastructures that are going to move towards a 24/7 goal. You have 100 near real-time payment systems across the globe as well, at different varying points of maturity, right? Some with really great market penetration and volume and scale, others a little bit kind of starting off. Interesting thing is now they're starting to interconnect for cross-border payments, right? So you have more of the traditional account-to-account transfers through banks going to a 24/7 operating model. And when you look at kind of technology and infrastructure, right, as we've kind of mentioned, a lot of banks are kind of at this point where a lot of their systems, whether it's their DDA system, their payment systems, their channels, anything in between those, are on legacy mainframes, right? They go down nights, weekends, holidays. They kind of do the outages where you do maintenance and upgrades and those type of things. And a lot of the infrastructure is just not inherently built for a 24/7, always on, multi-millisecond SLA type of experience. So as you navigate kind of this payment modernization, I think a lot of banks are at a conflection point where the traditional things are going to more of a continuous operating model. You have the ramp up of the 24/7 ecosystem, and you have to reconcile that with the not just the technology, but also the operating model of a bank, right? From an operations and investigations, a servicing perspective as to how do you make that transition. Now, the other layer that I think that's also important, which is payments were the first thing that really, I'll say, broke through the glass of a 24/7 ecosystem for financial services, right? Outside of kind of consumer cards, in terms of that and kind of some of the wallet experiences. So now that payments are actually moving more and more through these continuous operating models, it's this interesting dynamic where it's actually creating more of a visible gap to the rest of the financial services ecosystem of things that are complementary to payments, right? So if you take a import-export business between two global partners, if you look at just retail, investment, consumer services, whatever it may be, if you can move cash 24/7 through 65, but none of the liquidity or working capital or lending tools are available to complement that, it actually creates a really big gap on those nights, weekends, and holidays now. So one of the other trends that we're seeing beyond just continuous operating hours and kind of legacy mainframe to modern architecture and the operating models is that a lot of banks are now either launching, exploring, et cetera, with their own private chain technologies to move things to deposit tokens. And the tokenization phenomenon that's kind of going on across the industry is, I think, how a lot of the industry is looking to solve for the everything else besides payments concept as well, right? Where if we can take tokenized treasuries, tokenized money market funds, investment products, lending products, trade capabilities, and make it available on a continuous operating model with payments, you really solve for the whole working capital cycle. So I think banks need to kind of think in all these different lenses where you're moving traditional things to 24/7. You have the maturity of existing 24/7 services, but also this phenomenon of a lot of entities moving to more on-chain ledgers, right, that are going to be complementary and need to work with some of the traditional ecosystem. And as other assets and other products move on chain and become interoperable with the payments ecosystem, all of a sudden you have a traditional world and this kind of DeFi world that work together, all of which is faster, all of which is a continuous operating model. And you need to think through the tech to the operational to the servicing aspects of it. Not everyone's prepared for that. And I think it does come at a really unique inflection point in the industry where all of this utilization of AI is kind of really rampant around digital employees and automation. You can't make that change without AI, right? In my perspective, you have to be able to leverage and harness AI from an automation perspective to be able to help you move into that more of continuous operating world, not just for the speed of keeping pace with the change, but also for the automation of a continuous operating model where people, right, they're humans, they need to sleep, they need to go home, they need the breaks. We really need to harness AI to be able to kind of move and make that jump.
Funny, Carl, I think you just nailed a whole bunch of our topics in one. I know we're going to be talking about them. The interesting thing about all of this is that hurry up and wait you described. If you get one thing that's sitting there waiting for everything else to catch up, that's an issue too. And you mentioned that AI might be helpful in that. I'd like to hear from Luisa, from your perspective at Virgin Money, how have things really changed on that payment landscape for your organization? And what are some of the real opportunities you see and the challenges, amid the challenges we've been talking about? How can a payments provider get there to do some of the things that we've heard from Kellie and from Ramon and from Carl? Luisa?
Yeah, thanks, Scott. Thanks for that, Scott. Yeah, Carl really hit the nail on the head from my perspective in terms of that client and always on and the differing systems catching up with our 24/7 payments availability and how we support that from a client perspective. Clients aren't necessarily always on at the same point as well. So it's that catch up from a technology perspective. I think how have things changed from our perspective? It's a lot around we need to balance operational resiliency with that always on, and how do we keep propositions at our customers at the centre of our propositions. It's very easy to deliver that always on payments, but we need to balance that with security and protection from a customer point of view. And we talked a little bit about AI and how AI can unlock some of that always on and interoperability from a client perspective. I think we have interoperability from 2 points. We have that client perspective in terms of allowing clients, the ability to use things like intelligent routing. Do they want the fastest payments? Do they want the cheapest payments? We also then can use interoperability from a payment scheme perspective to provide that resiliency, which I think is critical, especially as we move into these new technologies and how we deliver them from a customer perspective. And certainly from a Virgin Money point of view, we are very much at the heart of what can we deliver from a customer perspective and how do we deliver that with confidence for clients. So that's very much at the heart and centre of what we offer from a propositional point of view.
Yeah, it's and your organization's changed. You've changed yourself in terms of your market areas, but you work with all types of businesses. Let's go to our first poll here, which is which challenge most slows down your payments modernization efforts today? Is it regulatory, compliance, pressure? Is it legacy systems and technical complexity, lack of payments expertise? Kellie mentioned this, overstretched teams, budget constraints, which some of you have been asking questions about. How do you allocate budget? We're going to talk about that. And then vendor platform limitations or misalignment within your own organization or with them. Audience, go ahead and answer those questions. We'll get back to your responses in a bit here. Kellie, as we're tallying those responses, your thoughts on the opening remarks. Take a deeper dive into regulations and AI. Both Luisa and Carl have mentioned AI. What's the impact of these new fragmented regulations, and maybe how is AI going to help us out in this next stage?
Sure. Yeah, there was a lot of really great comments, responses to those questions. I think what stood out to me was, Ramon, we're in this constant state, like mindset of what's next. And I used to joke about everybody who's in payments needs to have a little bit of ADHD, but like more so than ever now, right? And the focus on resilience, that is something that's top of mind for all of our clients. For good reason, and I'll come back to that in a little bit. Carl, I liked, really calling out the complexity around this convergence, right, of these legacy and new rails, account to account, instant payments. It's again back to that comment about the perfect storm. And those big considerations around things like liquidity, right? It's one thing to go for the shiny new thing, and customers, are anticipating or expecting some very, very, very seamless and instant experiences. But there's some challenges underneath the hood there that are creating a lot of complexity for financial institutions. And then Louisa, of course, really big one that always is top of mind for me is keeping your customer at the center, because at the end of the day, we're doing this for customers. We're not doing this for the sake of a better, messaging structure or a better, faster rail for ourselves or to do technology upgrades of financial institutions. We're spending a lot of money on this stuff and a lot of effort. And so at the end of the day, it has to be for what our customers really want. So that customer focus and keeping that is really important. With regards to regulation, so Scott, your key word there is fragmented. We've talked a little bit about, and I think everybody probably who would want to tune into this call is having challenges with fragmented regulations. They're nonstop change. They're often misaligned across borders. When we specifically look at financial institutions that are operating in multiple countries, that fragmentation can fundamentally change how AI and payments can be deployed and in what priorities. So I mentioned earlier about 2/3 of banks in our research say that they're struggling to keep up with the pace of change. But the top one that in that response of why is 41% ranked regulatory pressure as their number one barrier. So it's 41% of financial institutions are saying that regulation and changing fragmented regulation is a barrier to change. So for example, a fraud or a payment screening use case might be permitted one way in a particular country, but then it looks totally different in another, often being subject to different reporting and audit regulations, which make that harder. And these create huge operational and governance overhead for financial institutions. They have different data rules by regions and countries. And so because of the risk associated with non-compliance, right, nobody wants to hit the news. A lot of organizations pick either the lowest common denominator or align with the strictest jurisdiction, slowing innovation in more open regions. I worked for one of the largest international banks for about 10 years who went through their own challenges. And, you pick the strictest country and you align everything to that to cover yourself off. So, payments regulation itself is still very country specific, even when the problem we're looking to solve is global. And this often makes compliance more complex, as we've been talking about. So we're seeing a lot of projects become all about getting compliance check mark, and that's it. So, what we're starting to see is an increased missed opportunity to take all the work and money, as I mentioned, that we've been, pumping into this as an industry and spending some time to really try and derive benefits. So even the G20 roadmap, right? We've been talking about that for a few years, calls out regulatory fragmentation as a major source of friction, leading to conflicting requirements on data, transparency, and settlement finality. And this is also cited as one of the reasons why the global targets are not likely to get hit in 2027, is because of that slow streamlining of regulation. But at the practical level, so AI, how can AI help? That's what AI is really good at. It's good at helping manage complexity at scale. And so whether it's navigating fragmented regulations, improving straight-through processing, or using richer data more effectively, which we're all trying to do as well, I think what will really determine how much AI will help will come down to three things. So first, people. AI works best when it's augmenting expertise, not replacing it. In payments, especially where accuracy, explainability, and accountability are critical, banks are going to need that expert in the loop model as they build out their AI governance. AI should scale the judgment of experienced people, right? Not automate or not operate autonomously. We've been talking a lot about that in the industry. I'm sure everybody's heard expert in the loop, human in the loop. And so without human oversight, that trust can break down, both with regulators and internally at financial institutions. Second, I think it's technology. AI, Gen AI, general AI is not good enough. Payments is one of the few domains where even 99% accuracy is not good enough. So even 1% can lead to reputational, customer, regulatory risk. And so, payments require very specific domain AI expertise that understands schemes, regulations, messaging standards, but also operational nuances, the so what. So it's not just a matter of reading scheme books and interpreting message standards. It's really taking that human expertise and being able to scale out to say the so what and build that into models. And then embed that into architectures. Because without having resilience, back to Ramon's comment about resilience, we need resilience in payments modernization. And so we need to look at what's happening in our industry, that this is going to continue to happen every year. Like SWIFT standards releases, like Fedwire and CHIPS changes every year, RTP upgrades every year. That's going to continue to happen. And so the third, I guess, from my perspective on AI and how it can help is around governance and deployment. So it's around building in governance on how we deploy around explainability, audit trails, clear accountability, and the ability to demonstrate control. So, citations, really being able to show where you using and sourcing the information that you're making decisions on, et cetera. So yeah, I believe that organizations that are going to deploy it with intention, transparency, and with human expertise at the center are going to be the most beneficial.
Thanks, Kellie. There's a lot to unpack there, but what I heard was people, technology, it's a tool. It's not necessarily going to replace anything, and it really isn't always going to work. That's one thing about Gen AI. Every application is different. And one thing I heard both you and Carl say very clearly, and Carl, we're going to come back to you as we show the poll results, is just this has to be for your institution. You have to know who you are and what you want to be before you can make a lot of these decisions, which is one of the questions that's been coming up. And if we look at these results, Carl, first, any surprises to you on the order that legacy systems is the biggest challenge, technical complexity for people? The others actually falling quite a ways behind, regulatory and then the budget constraints. Any thoughts on that first? And then maybe talk a little about how stable coins and tokenized deposits have made their way into the mix, how you bring it all together as a financial institution, as you talked about. There were some questions about how you actually handle settlement, and why is AI specifically helping with that mix, Carl?
Yeah, no, absolutely. I'm not surprised that legacy systems and technical complexity is kind of the leading response there. I think as you look at most financial infrastructure for banks that have been around for decades, centuries, right? In the case of BNY, I've been here 241 years. There's a lot of legacy systems, processes that you have to kind of chew through and constantly mature. It's a never-ending game, right? You never reach a finish line with that, right? It's constant modernization to kind of move to the market dynamics that are at play in any of these given systems. And it's real, right? And, going through all the trends that I think we're facing in the market, when you think about kind of DDA, risk, compliance, KYC, sanctions, AML, fraud prevention, user experience, channels, right, payments ecosystems, more and more off-rails, more and more correspondence, wallets, traditional, fiat, non-fiat, right, things that you need to bring together, the market's actually getting more complex, right? So I think there's this kind of ongoing dynamic around how do you build your ecosystem to centralize a lot of the core common functions, as opposed to manage these things kind of rail by rail or product by product, and really try to draw on what are the common symmetries, right? And this, I think, is just a key point that a lot of banks were already on the journey of, just talking about how we process wires to ACH to instant and multi-currency and FX and all these different things. To be honest, I think it actually gets amplified with the dawn of tokenizing deposits and different types of assets and the interplay between fiat and non-fiat payment and asset mechanisms and the two different types of ledgers that ultimately they sit on, right? What I kind of look at, and I think this is a good progression in the industry, where for a long time, when you heard things about DLT and blockchain and these type of things, I think a lot of the people in the industry, and when you hear kind of in the media, it's very focused on the technology. Right? Here's what the technology does, here's how it works, here's the benefits of the technology, but it wasn't very often grounded in use cases and benefits, right? How does a business, a corporate treasurer, an AP, an AR team, someone who's doing importing and exporting, a day-to-day consumer ultimately benefit from this, right? And kind of tying this back to what are we trying to do as an industry? We're trying to expand the availability of financial services, right? Something is not available on nights, weekends, and holidays. How do we make it available 24/7? How do we help make the services more resilient? How do we help make them faster, more reliable, more transparent, more cost effective? And how do we help them more interoperate with each other, right? And part of that, I think, in the ecosystem is how do we help payments interoperate with each other, right? So fiat payments, high value, low value, instant rails, bringing those things more together in terms of comprehensive solutions, being able to facilitate payments in fiat across the globe. There's still a lot of work and maturity, but also a lot of benefit to be had just taking, one leg out models and doing instant payments into markets that operate it, right? Leveraging what Swift has done, right, with correspondent banks to really speed up the SLAs of payments and add more transparency onto them. There's a lot of things from a market infrastructure perspective where the enablement of it really hasn't kind of saturated all the way down to the end users yet. And there's a lot of, I'll say, pent up value that can continue to go to businesses and consumers just by taking what the market infrastructure has built. It just hasn't scaled to that point yet. And I think when you look at, to your point on kind of tokenized deposits, tokenized assets, moving things on chain, I think that's a great tool. It's a technology, it's a process, it's a methodology to help us actually fill the gaps in where market infrastructure still has gaps, right? Where we can't do things like offer investment products, lending products, interoperability of different things. That can actually fill the gap to make it more available, make it safer, make it faster, make it more resilient. But the nuance here, and this is the trick, and I think this is where, certainly BNY and a lot of the industry is going to focus in the coming years, is how do these things work together? What we don't want to have is kind of getting back to our legacy tech debt, are different systems that don't talk to each other, right? Different, really solving for more complex interoperability. We really need to think from the design phase out, how do we manage deposits? How do we manage cash? How do we manage liquidity products? How do we manage assets in a world where there's two different technical models and methodology models living together, right? And together, I think they can harness and bring a lot of value to the market. That's where I think the market's really going to start testing. Who are the players? What are the right models? What are the use cases that are really going to flourish? Where can we get network effect? Because with anything new, you always need network effect to really make it real and make it scale. But I think grounding it in, we're trying to make something more available, more resilient, faster, more transparent, more cost effective. And with that as the leading target, whether you talk about a different financial product, grounding it in that is going to be a mix of where can we pull from traditional, where can we pull from this kind of new tokenized world, and how do they work together for a seamless experience to the front end. And that's the fun part of being in any business, building product design, those type of things, right? Really trying to find out how to deliver that, noting the market is really kind of this moving dynamic.
Thanks, Carl. And there was a question from one of the audience members on specifically settling. I don't know if we have much time to handle this right now, but if you have any quick thoughts on that before we go to Luisa, that'd be great. Was settling on stablecoin and tokenized deposits, the difficulty of doing that between sources backing fiat. Any quick thoughts on that? And it also kind of ties into another question we have is how can smaller institutions jump on board when we have all these groups setting up, their own internal connections?
Yeah, no, it's a great question. This is an area that BNY is certainly focused on. We've been doing digital asset custody for a couple of years now. Really enabling a lot of the players within the space, whether it's the stablecoin issuers, the digital asset providers and platforms. We view this as an ecosystem play, right? Where you have to really build the financial architecture to help both the traditional players and the digital asset players really access and interoperate within a single ecosystem that can move fiat to a tokenized deposit, and a tokenized deposit can be interoperable with other tokenized assets, and really building that chain. I know there's a lot of industry efforts as well that are going on at the moment. One that's public is with Swift. BNY has been working with them and several banks across the globe on how do we not just build tokenized deposits per bank and build these kind of ecosystems bank by bank by bank that ultimately don't talk to each other, but how do we focus on interoperability as well? So I think there's kind of two answers to that, Scott. One is banks being able to move fiat to non-fiat within their own ecosystem and walls, right? And BNY's did announce something a couple weeks ago on tokenized deposits as our first step down that journey to be able to expand that. Other banks are doing things in that ecosystem. What we really need to do, and I'll say that's a little bit more of the easier step for the industry, what we really need to focus on is interoperability. And how do we, if most banks are doing that and they're going to tokenized deposits and, you know, and different tokens and different assets, how do we exchange that across the ecosystem, either within a specific country or from a cross-border perspective? So, right, I think, you know, Swift was one of the early ones to come out and try to address that head on. That's why we've been working with them on how do we solve for standards, how do we solve for interbank settlement tokens, how do we use that as a mechanism to potentially, again, grounding it and speeding up cross-border payments, adding resiliency, making it faster, bringing 24/7 services into markets that don't have it. I think there's other things that'll likely pop up region by region, you know, in different pockets, trying to solve that. Let's not just build these isolated ecosystems, but let's ultimately have also a model that makes them interoperate truly on a global scale.
Thank you very much for that. And Louisa, I just keep thinking with the kinds of clients you deal with, and you deal with all different kinds of business clients specifically, how do you balance the regulatory differences, even in one country, despite, you know, all these changes in governance needs, and how does AI and maybe the tools, the systems it brings to bear for you in your job work? Maybe this will answer some of our audience's questions, Louisa. And if you have any thoughts about the panel, the results from, not from the panel, but from our audience, that'd be great.
Yeah, no, that's fantastic. Thanks, Scott. I think from our perspective, it's very much, I mean, Carl talked about this, as did Kellie, some of the, you know, simplification of our existing legacy estate. And I think that's true for pretty much all of the banks, probably worldwide, but certainly from a UK perspective. So simplifying the current estate, how do we do that, first of all, to allow us to, you know, from a technology perspective, deliver technology to our clients in a simple way, but allow us to, you know, comply with regulation, which is kind of first and foremost what we need to do. I think some of the global aspects, you know, we can use LLMs as an example. One of the questions I think from one of the audience members was around LLMs and how we can use them to simplify kind of governance across the globe. So I think it's looking at how AI and LLMs can support that type of activity. One of Christopher's questions is around actually readiness for some of the industry changes that we see kind of bringing governance to the customer proposition. And Kellie talked about the three aspects in terms of people, architecture, and governance as well. And I think using some of the technology to simplify and assist us from a readiness perspective, particularly for things like the hybrid addresses and the end of unstructured addresses in payment messages, you know, we can use AI to look at all our legacy systems to see where we don't have that pure data that we need to have in order to, you know, facilitate and support our customers from a like structured and unstructured address perspective is one of the key points from my perspective. And, you know, similar, we talked a little bit about AI and how that can determine customer predictability, for example. So, you know, using it to predict what we think customers will do in certain circumstances and ensure that we're delivering some of that new technology safely for our customers, because we understand and have used AI to look at how customers, or how we anticipate and expect customers to behave, and when they don't behave in the way that we're expecting, to make sure we're, you know, warning them appropriately of, you know, any potential fraud, etc. Because, you know, as the world becomes quicker, faster, you know, more straight through processing, I think that also, you know, allows for fraudsters to put, you know, interject those journeys, and, you know, it becomes a, you know, easier for a fraudster to perpetrate fraud from a client perspective, where you're always on and you don't, you've got that kind of straight through seamless journey. So I think there's a lot for us to be focused on from a banking perspective. But from my point of view, it's very much, Kellie talked about it, we don't switch payment rails off. We probably don't switch channels off. We don't switch the ability for customers to interact with us off. So it's how do we then use the technology to deliver, or how do we use technology to deliver technology across all of our channels?
Yeah, it's multiple channels, multiple types of clients. Ramon, I'm going to kind of throw the same question to you. We had a question from the audience. How do you balance all this? We're just trying to get things done. That's what the customer's saying on the other end. The bank, of course, is trying to meet those needs, or the financial institution, whatever they might be. Share your thoughts on that. You've got some feelings about the realities of compliance in the new multi-payment type world, and how those customers view all this.
Yeah, I mean, it's all of those things are interesting. When you talk about things like exchange between fiat and non-fiat coins and the utilization of the stable coins or other type of model, I think standardization, I think, is one of the words that come to my mind. I think there is one of the things that we have to understand about the digital currency market is that there is no standards. There is a lot of investigation. There is a lot of different systems. There is a lot of things that are being utilized, but there is a lot of jump between the sides, and there is a lot of utilization of different systems, but the costs are not always explicit. The cost and the impact of those changes is something that organizations, especially organizations that are going to be utilizing those systems, have to have in mind. I think technologically and from the point of view of the advantages of stable coins and other type of digital currency, there is a lot of advantages in terms of time and executions and simplification of the processes. But openness about what is happening in terms of the exchange and how is that being managed and what are the cost implications of that, I think is something that is a little bit more needed in the market. I think also there is also a lot of new capabilities coming into the market that are starting to do a little bit of big plays. I mean, you have, for example, the direct connectivity of the European Central Bank and the Swiss Bank Central Bank for massive payments, which has been announced. You have the Nexus network in Asia, which is bringing connectivity between instant payments across all the regions you need. So there is a lot of other new capabilities that are coming into the market and then tell you, oh, okay, so I have digital currencies here, but actually these other capabilities bring in some of those benefits at the same time, and we need to account them for. So the market is basically open in a lot of different ways, and we basically don't know what is happening in the market in that space. So there is a lot of different...
I think of the term scattershot, Ramon. I think of the term scattershot, like everything's kind of going everywhere.
Yeah, and having an standardization and having the regulators bringing in clarifications about those processes is going to be important. I mean, there are regulators that impose a really high tariff for the exchange of fiat to non-fiat. Well, so what is going to happen in that space? There is a lot of things still in place in the space of cryptocurrency. On the other side, on the side of AI, I mean, we work with a lot of customers doing AI. And I think one thing that we are seeing in the market is a lot of experimentation, but there is not a lot of real utilization in production. There's a lot of experimentation with these technologies. There is no real utilization of the production. And it's something that we need to have in mind is, okay, when I go to experiment, for example, with an LLM, that LLM is not optimized for production usage. It's going to be slow. That's true. But why do we need an LLM? Why don't we talk about models, agentic models that are smaller, trained for specific capabilities to do that specific task. Those models are going to be faster. If you put that model through an inference server, that model is going to be trained in a different way to be way faster. So that new system is going to be a lot faster. Then the next step is, well, okay, so I'm going to do all of this, but how do I do it? How do I incorporate all of those new components of AI into my supply chain of software? Because it's not only about experimenting about it, it's about integrating it in the way that I release the software. So having the right system that is going to enable you to integrate it in that software release chain and help you utilize it also for the build of your software is going to be key. And we need to pay attention to that. It's not only, and hey ho, I'm the technical guy. It's not only about the hype, it's about how do I build it? How do I integrate it? How do I make it work? And that is where it's beautiful. When I see those systems actually working and running in the market, when I see the clarity in the transformation, when I make a decision, in this country, I'm going to use this DLC, but what do I do when I go into that other region? And how is that transferring here? What is going to be the cost of the transfer between this central bank digital currency and this stablecoin? That is what I want to see, because we have a lot of scattering. We don't have a lot of homogeneity.
We hear you loud and clear. And by the way, we have one of the best panels I've had in a long time in terms of combined expertise in many areas when it comes to payments. And we're going to get their final thoughts in a minute. But what we just heard was, it's the right tool, but it's also how it integrates with everything else you're doing. And of course, at the core of it is back to what Kellie said, you've got to use the right tool. You've got to have the right people. You have to have the right systems. Before we get to our final question, let's do one more quick poll. And then I'm going to poll our own panelists on their thoughts. Where do you see the greatest opportunity for applying AI? We've just heard a lot of different examples, how you can accelerate your payment modernization program. You've got choices from automating the analysis, design, testing, and validation, so you can accelerate your delivery, reduce those project delays. Can you accelerate or can you scale that scarce payments expertise across teams? What about supporting that integration that we talked about between your vendor and platform and improving your risk, outage prevention, or maybe you're not sure? Quick answers to those questions would be great. We're going to get we'll come back to them in a couple minutes here, but we're going to get our final thoughts from our panelists in a minute here. Kellie, before we get final thoughts, your thoughts on what you've heard and seen thus far, if we can keep it fairly brief, and then we'll get to our final questions.
Yeah, absolutely. Thank you. So what I'm hearing as a big and loud theme is convergence is challenging. So financial institutions, we talked a little bit about this. There's legacy infrastructure competing with new systems, new rails, always on, evolving demands of clients, keeping them at the center and making sure that we can meet what their needs are. We talked a little bit about innovation, which is great. Again, all of these new things that are coming to market for good reason. But we also need to solve for, and Carl mentioned this, is impact on liquidity, fraud, compliance. There's also data resiliency when all these rails have to coexist. So that's not going to be easy for a lot of organizations. And then we also, pulling out data specifically, we've got a lot of organizations don't have great upstream and downstream data mapping. And so, where all of these traditional and new rails are meeting together, and they need to talk to each other seamlessly, the risk is that they don't, isn't that the technologies don't work individually, is that they don't work great together. And so financial institutions are expected to have a seamless view, a seamless, customer journey for their customers. And so I think, as we look at great new opportunities within in payments themselves. It's, really solving for some of those that complexity in the background. So that's what's standing out a lot to me. And of course, where AI can help. And for us, if we go back to, what AI is really good at, it's really good at figuring out really complex problems. And so, for us specifically, RedCompass Labs, we're in helping to deliver on payments modernization. And so what that means is when you look at a project lifecycle is using the massive amounts of information in the industry that continuously changes and being able to turn that into quicker, smarter, better quality artifacts. Decisions to change, how to modernize systems, things like that. So I think that's where AI is really going to come in helpful.
And you're going to get a chance to prioritize that in a moment here as our final question. Regarding the responses from the audience, and then we're going to jump to our final questions. It looks like the biggest number on here is that whole automation process of a lot of the things that are going on now with projects to improve them. The other ones, scaling payments expertise, that's an important sort of outlier there as we see the numbers. I think this is very interesting, but speeding things up and helping expertise. Final thoughts from each of you. Please take a minute or less so we can get done and get our audience back with what they need. Ramon, if you could pick one thing to put at the top of the list to prioritize in everything we've talked about here regarding payment modernization, what is that ingredient or question you would raise at a financial institution?
I guess I'm a one-trick pony, but I'm going to come back to what I said at the beginning. Fundamentals. Build base the right way. If you build the base the right way, you can achieve high speed. You can actually integrate and create that homogeneous system that can be managed by a smaller team and can do the change in a way that is efficient and fast. We have a lot of cases of that, and we work with a lot of organizations, not only in banks, but also fintechs and central banks doing that part of the fundamentals. And integrating, building that system enables you to actually define the future and build the future in a faster and efficient way. I see That's that great. Day to day. I work with a lot of these organizations. So yeah, it's something important. And then the next thing is how do you integrate the AI is by doing that, by integrating it from the fundamental, from the supply chain into the system. It's not only about choosing an AI, it's about how I'm going to integrate it in my software supply chain.
Excellent. We are talking about multiple payment provider types. And Louisa, your thoughts, your final thought.
Yeah, thanks. So probably not dissimilar to everybody else. I think it's important because a couple of final points from me is, we need to use that AI in the right way. So, we need to use that AI from my perspective, to support analysis, not to replace the human ability to, drive analysis and drive findings from analysis. We need to use AI to expedite documenting processes, etc., and to support testing. I think from a customer perspective, we should always bear in mind that we've got the customers at heart. You mentioned that earlier, Scott. So I think it's really important to balance technology with what the customer needs is, and really look at what that propositional analysis is from our perspective, and supporting our customers, through that change, and making sure that we're coming up with real benefits for the customers, that cost benefit analysis as we deliver new technology to them across multiple different platforms, and supporting that interoperability from a resilience perspective and a choice point of view. They would be my final comments. Thanks.
Thank you. We keep hearing make sense for the client, for the customer, whoever that is. Carl, your quick thought. Payments modernization, what's the top priority if you're looking at it as a provider?
Yeah, sure. So just picking up on the theme last maybe 10, 15 minutes, leaning into AI, right? So I'll take maybe 30 seconds to just share something. BNY's had a proprietary AI platform called Eliza, named after the wife of our founder, Alexander Hamilton, which plugs in multiple language learning models. And we've taken an approach of AI for everyone, not just the engineers, right? So our product folks, our operations folks, our business leads, our sales folks, our service folks, everyone, 99% of the organization is not just an hour certification, but fully trained on AI. I've built my own agents within this platform, helping me do a variety of different complex things. So really take a cultural approach to getting everyone to be a well-versed user of AI within the organization, because it's applicable across the board. And everything we've talked about here, right? You know, BNY has over 100 digital agents in production, doing payment investigations, doing payment inquiries, helping the manual queues get better, more accurate, faster results when things go to those manual processes. We're using it to accelerate our engineering. We're using it to write user stories. We're using it to draft code. We're using it to write test cases for us. We're using it to help clients navigate our APIs marketplace and look at code and test cases and test scripts. So from front to back, from operational resilience, speed and quality, accelerating the engineering workflow to even kind of the front end consumer interface, it's applicable to everything, right, across the board. That's why every team and expertise ultimately needs to harness it. And that's the only way, kind of tying this back, that you can really truly accelerate your organization and move into a continuous operating model. So it's there, it's real. We're using it across the business, in production, live, at scale. And I think this is going to be really a game changer to help the market move forward.
Thank you. And Kellie, bring us home, final thoughts.
Okay, I'm going to keep it positive. So at the top of my list would be modernization is not optional. But let's make this more about a growth story. So I was in product management for a big part of my career. This is our time, right? Like, it's not just an efficiency or a compliance agenda. You know, we've got a lot of new opportunity here. So, you know, unlock new products, better data, entirely new revenue models, you know, start building out some value-added services around this stuff. You know, I know that's hard with the complexity of what's in the background, but, you know, if we can pivot as much as we're trying to solve for some of those challenges. Also, you know, work closely with vendors and partners. There are people out there that can help. So figure out, you know, where you need to focus on modernizing, where it'll differentiate you, and partner where you need to have speed and scalability. There's lots of ecosystem partners out there and vendors that can help with that. And wow, what a great time to be in payments.
There you go. There you go. Perfect way to end it. And I want to thank our audience sticking with us through a lot of complex topics, but we've got a great panel here. I hope you've heard a lot. You can reach out to them. Thanks, Kellie, Ramon, Carl, Louisa, for joining us. You, the audience, you can watch us on a replay. Hope you all have a great day. We'll give you back to your day. Thanks for joining us for this Finextra webinar. Talk to you soon. Thank you. Bye-bye.